Oh, welcome. How you guys doing? This is Dr. Greg McLeod from the Elite Traders University. Welcome to Bulls versus Bears, the weekly Forex forecast. And yes, it is Monday, October 14th, 2024. And what we're going to be doing is analyzing the economic news and making some predictions in the Forex currency space. So I know we usually do it on Sunday. We did it on Monday. It was my birthday weekend. And so I had a great birthday. My $1 million Pip and Run graduate, John, came to visit. So we hung out in Vegas and did the Vegas thing, and so I had a wonderful time. Big shout out to John out there, John Miller in Austin, Texas. Okay, let's go and get started with the Bulls versus Bears weekly Forex forecast. My voice is a little hoarse from shouting at the Texas Longhorns. UT, go UT. They were able to win. They beat the Oklahoma Sooners in the Red River Challenge, I guess I call it, and so they beat them pretty handily. So my daughter goes to UT, so hook 'em horns. All right, and let me go ahead and share my screen with you, so we can go ahead and get started. Bulls versus Bears. And I'll share my share screen, and let's go. All right, guys. This is brought to you by Elite Traders University. Elite Traders University is where you can learn how to trade profitably in 90 days using my proprietary system and learn the Pip and Run system, a way of compounding your trades, compounding your wins so you can retire early and live a financially free life. Go to www.elitetradersuniversity.com to sign up for a free strategy call with myself. And let's go ahead and do a profit acceleration call. We look at your trading, we examine how to help you become a better trader. Okay. The weekly Forex forecast is getting started right now. Countdown. Let me direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I've been doing this for almost 30 years, and it's so good to be able to do this and help traders use the analysis that I use to predict and forecast the market based on market conditions, economic indicators, and also a proprietary approach for predicting price. The predictive function helps us to find out what's going on in the market ahead of time. And it's a proprietary. If you want to find out more about that, again, you can book a call with me. Okay, let's take a look at. We're going to look at the dollar index, euro dollar, pound dollar, Aussie dollar, dollar yen, dollar CAD. Those are the majors, and then we're going to take a look at silver, or actually gold, and the S&P, and look at but we're going to start with world events and the economic picture, because world events and the economic picture is how we determine where markets are actually going, because that's what drives. We look at the technicals. A lot of people are just technical people, and that's fine. If you are a very technical trader and you don't care anything about the news, you can fast forward this video. Okay, make sure you like and subscribe if you want to receive notifications, and also helps the algorithm recognize that we have some really great content to help traders succeed. There are a lot of big parties, a lot of big people, a lot of institutions out there that I used to work for that are not happy with me sharing this type of information with the average trader. I used to work for a Wall Street firm. I analysis and trading for big clients. So this information I'm giving you is not universally available. In fact, if you were to subscribe to something like this with Bloomberg, it might cost you like $25,000 a year, and I give it to you free every week. Okay, so let's go ahead and get to it. I'm gonna go to my market heat map. My market heat map is what I've created. It's a scanner, a market scanner. It keeps it very simple. Green is an uptrend, red's a downtrend, and gray stay away. It's just $19.99 per month if you'd like to subscribe to it. It's like a Swiss Army knife with a bunch of other tools inside. But in fact, you can come to the site for free and see that we have a dollar Swiss, dollar yen. The dollar pairs are up, and we can see in gray that the other pairs against the dollar are down or neutral, right? So let's look in the front. It's absolutely free just to come to the front page and get all this information for free on my market heat map. And then here you go. You've got the economic calendar. This is very, very important. We had Chinese balance of trade. You say, well, Greg, we don't trade China, but au contraire, you don't understand that China is a growth engine, is the second largest economy in the world. And so, and they are the largest trading partners for two of the currencies we like trading. That's Aussie dollar and Kiwi dollar. In fact, when the China catches a cold or they have negative economic news, well, then the Australian dollar, New Zealand dollar catches COVID, they catch the flu, they get a bigger brunt because they depend on China for so much of their exports. So we can see that we had balance of trade was previous at 91.1 billion. It dropped 10 billion. That's huge. 10 billion. The balance of trade. And guess what? Australia and New Zealand are part of that balance of trade, and they probably got screwed too. And we're going to take a look at a chart to show you the impact of this Chinese balance of trade on the Australian dollar and the New Zealand dollar. Then on Tuesday, we're going to be looking at, which is we're going to look at the UK data. You got the Union Jack flag, United Kingdom. We're going to have the claimant employment data, claimant count change, unemployment rate, and that's coming out too. And the pound will be in play. So we may not know what those numbers mean or any of these complex terms, but we know that we can look at the flag and see that that's probably something we want to look at. That's where the activity is going to be. I know many people out there in YouTube world, YouTube University tell you, don't trade the news, don't trade the news. It's like, you're not going to trade the exact time of the news, but you got to understand that if you're trading, Canadian, Swiss franc, it's not going to move. If you're ever been in a currency pair and the people complain, currency pairs don't really move, and I like trading the indices, because you're trading the wrong thing. The economic calendar tells you what the big dogs, the big guys on Wall Street are trading. They're going to be trading the pound dollar at this time. They're going to be looking at the pound, and they're going to look at the pound currencies like pound CAD, pound Swiss, pound yen, are all going to be active during this time. We may not trade exactly during the news, but we can trade 30 minutes to an hour afterwards. We can trade 30 minutes to an hour before it, but this is going to be in play. So while you're hanging out with Euro Norwegian kroner, well, guess what? The pound is going to be moving. You're going to say, well, I wonder why I didn't make any money today, because you're in the wrong currency pair. Okay. Just a quick lesson there of how to use the economic calendar. Okay. Then we have some German data. It's a German flag. They're part of the Eurozone. They're the largest economy in the Eurozone, and that's going to be active as well. And then we have at 8:30, we have New York Empire State Manufacturing Index, and that's supposed to drop from 11.5 to 2.3. Okay. And so that's going to be the euro is the anti-dollar. We'll probably look at the euro there. We have lots of Canadian data coming out on Tuesday. So the Canadian dollar, dollar CAD, CAD yen, CAD Swiss, all the Canadian pairs are going to be active during this time period of 8:30. And so we have lots of inflation data, core rates of inflation. Inflation is one of the biggest drivers of currency rates, as they drive interest rates. Central banks use interest rates to fight inflation. And so the central banks will look at the inflation data and decide whether they want to cut or raise rates. And that in turn creates currencies either will go up with higher interest rates or down with lower interest rates. Okay. Then we'll go to Wednesday, more Union Jack flags or United Kingdom, Great British pound flags here. And we can see inflation rate, core inflation, more inflation data. Everyone's watching inflation because of supply chains and things, wars that are going on in the Middle East and in Europe, which are causing the flow, really decreasing the flow of goods and services, making it risky. They're taking ships that cannot, go through the Straits of Hormuz, and they're taking them around to different areas over land by air, which is more expensive. And so that is creating a global inflation based on all the risk, all the wars that are going on, or even like we had the strike we had on the East Coast with the shipping that also drives up the price of goods. Also, fuel, energy. You got to put the stuff on trucks. You got to put it on planes. You got to put it on. This is Amazon, where they have electric vehicles, but the cost of fuel, of oil, will impact inflation as well. And that's why, hey, if you have more oil and oil is cheaper, then gas is cheaper, and therefore goods and services that we buy are cheaper as well, because people are not paying as much for transportation. Okay, so that's why it's very important to have a robust oil sector. But then we're going to have ECB President Lagarde is going to speak, so the euro's be in play a little bit. We don't know what she's going to say. We could probably go into more detail about that. But then we have Japanese balance of trade, and typically Japan likes weakening their currency around this time because they export lots of like Sony PlayStations and Lexuses and other Japanese products. They're an export nation, and they want a weak currency in order to keep their economy afloat and drive profits for their companies. So they will reduce the value of their currency on purpose in order to make their goods and services cheaper. You can buy more Japanese goodies with your US dollars or your British pounds because of the lower exchange rate between the yen and other currencies. And that's why pound yen, CAD yen are all rocketing higher during this time, okay, of the year, going out into their fiscal year, which ends in March. So seasonal patterns would dictate a stronger currency versus the yen, and so those yen pairs should be spiking, right? Unless we have something like the election coming up, which could makes people a little bit nervous. And okay, we'll talk more about that when we get to the technicals. Okay, I'm going to blow through these real quick. Lots of Australian data. Australia is in the mix here. And again, we're seeing employment change drop from 47.5 to 25,000. Employment rate to remain the same. Full-time employment change actually increased. The participation rate remained the same. Participation rate also part-time employment change dropped from 50,000 to 7,000. So that'd be pretty negative, right? So again, we're going to find around 8:30, we're going to find a lot of Australian data. So I'll be trading Australian pairs, Aussie yen, Aussie dollar. But I'm also going to look at Kiwi as well because New Zealand is geographically close to Australia and they behave the same. So I can look at both for trading ideas, right? That's how we determine what to trade. That's at least that's how Pip and Runners do it. So if you would like to follow along with how our successful Pip and Run traders trade, well, then you can follow the economic calendar. Now, Thursday is going to be super Euro. We got CPI, which is an inflation rate. They're expected it to actually drop a little bit. Year on year goes from 2.2% to 1.8%. So Thursday, we're going to be trading the euro. ECB rate decision coming out as well. That's going to be huge. They're expected to cut rates from 3.65% to 3.4%. So their rates are going back toward zero like they were. So as a weaker economy, the ECB, in order to stimulate their economy, to jumpstart their economy, just like to try to jumpstart the economy, they're going to have they are cutting rates. So we're seeing that going on there. Now, 8:30 on Thursday, we're going to see retail sales year on year, supposed to drop from 2.1% to 1.6%. And then retail sales month on month supposed to actually rise from 0.1% to 0.3%. Again, when I look at the dollar, I look at dollar yen. It will be a great trade. I'm looking at dollar yen long, no matter what's going on, because a couple of things going on. We have a softer U.S. data, which means they might have to cut rates some more, but their rates are still going to be higher than in Japan, and Japan's be weakening their currency. So dollar yen would benefit to the north based on that. Again, not a trade recommendation, just something, an observation, and you can do it with you wish. Okay, and then we come down to let me show more. Do we have anything for Friday? Yeah, we got retail sales out of UK, more Chinese data. And that could be very, very bad for the Australian dollar, if it doesn't surprise, and the New Zealand dollar. So again, we get another shot at shorting Aussie or shorting Kiwi dollar. Inflation rate year on year in Japan supposed to actually drop from 3% to 2.7%. Okay, so no reason for them to hike rates anymore, which is supports yen weakness. And then we have the Friday, that's pound the retail sales month on month, retail sales year on year. So there you go. I did it in 20 minutes. Let's get to the technicals. I know you're like, okay, stop this stuff. Let's go to the technicals. And I completely understand what you're saying. Okay, so we're going to go to some technicals, and I'm going to go over to TradingView, and then we're going to go over to take a look at the charts. We're going to start with the dollar index. Dollar index is the basket of currencies versus the US dollar. I'm using TradingView. TradingView charts, great charting package. Go to tradingview.com if you want to do something with them. They usually have a Black Friday sale on November. going into Thanksgiving. So it's a pretty good deal, right? So I'm going to go ahead and go to super charts, and we're going to go here a little bit, and let's close some things up, right? Get some more chart space, right? And we can close that up too as well, right? And then we're going to use dual time frame analysis. We're actually going to go to one chart here. This is the US dollar index. This is, we're going to look at a monthly chart, right? And here we go. So here we go. Usually rates, this is the US dollar. We can see that we are in a uptrend, right? Higher highs and higher lows, right? And but lately we've have been flat for a while, been in this sideways consolidation on the US dollar index. The reason why I look at the US dollar index, because the 85 to 90% of all Forex transactions deal with the US dollar, right? So think of DXY as USD, right? And we can see that after our big rise, as interest rates went up, so did the US dollar go up, right? So we bottomed out. We had like our interest rates were like almost near zero because of the pandemic. But after the pandemic, we see a rise in interest rates and a rise in the dollar. But then as inflation started to come down, we started seeing a drop in the dollar, right? And we dropped and we moved into this range. And then the Fed started cutting rates, right? And we got that big push down, but we weren't unable to break below this 99 area, which acted as support back here on July 3rd, 2023. That was like the low. We retested low. So we have a double bottom, which is very, very bullish for the dollar, unable to break the rising trend line, unable to break this level of support. Basically, price broke out of this older range. We had another range back here. Price broke out of this range, right? We broke out of this range, and then we came back down, and I can highlight that in another color, maybe like blue, right? So we have this other range that we were in, and then now we broke out of that range, came back and tested basically the top of the range. We call it RTTFC, return to the scene of the crime. So we return to the scene of the crime, right? We return back, but now we can see that we have almost an inside day bar or harami candle, which is telling us we won't be able to cut rates. There's some inflationary pressures that still are in the market. And so the amount of rate cuts that we were anticipating, we're probably not going to get, because structure-wise, we were looking at lower low, a lower high. We needed a lower low, and we didn't get it. We got the same low. Same low is bullish. When you see two black cats walking by, like in the Matrix, you saw the black cat, another black cat looks exactly like the other one. Well, that's a deja vu. Deja vu. Everyone panics. Why? Because something has changed. Everyone thought this was going to go down. Now it looks like it wants to go back up, right? And so what would that do? That's going to make Aussie dollar weaker. It's going to make New Zealand dollar currency pair weaker, and then it's going to make the euro weaker as well. So once you understand the dollar index, you can understand the major currency pairs, and you basically have the key to the entire Forex market. Again, that's what we teach in the Pip and Run. That's why our traders are so profitable, because I take my 30 years of trading experience, 10 years working at one of the world's largest Forex broker dealers in the world, taking that insider information and giving it to our students so they can have an unfair advantage in the market. So all your little squiggly lines and order blocks and blah, 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 blah don't really work, because banks don't even use charts anyway. They think charts are voodoo. Why would they need charts when they know what the market's going to do ahead of time, right? And that's what we teach. I'll tell you more about it if you sign up for our free Profit Accelerator call. Click the link below and join our Profit Accelerator call on Zoom. It's 45 minutes. That'll probably change your trading. Sometimes people watch that call, and it's just enough for them to get their head out of, stop being a retail sheep, being taken to the slaughter every time because you're constantly using your credit card to refund your account, or constantly refunding your prop account, buying another prop challenge only to blow up. There's insanity when you do the same thing expecting different results. And the mind that created the problem, as Einstein said, cannot solve the problem. You need a mind outside. Use my mind to get you out of where you are. Go ahead and sign up below. Continuing with the dollar index, let's go drop it down to a weekly chart. And you can see dollar index is trending higher. This is an uptrend. This uptrend means that no matter what you do with regards to the euro or the pound, it's going to go down on you. Why? Because the dollar index is made up of all the other currencies. It's like the white light and you have the prism that breaks it into multiple colors. Well, this is, the dollar index is the driving factor for the other currencies. Look at the daily chart. We can see we have an uptrend, strong uptrend, which means other currencies are going to weak. We drop down to a 4-hour, and we can see that we have a roaring uptrend. Very little red pullbacks or opportunities to go long, right? So let's go and take a look at the anti-dollar, which is the euro. Okay, so bulls versus bears. I would strongly be bullish the DXY, for the reasons I showed you. Higher, we got the structure, we have the candles. So yeah, definitely want to be a buyer of the DXY. Right? How do we buy the DXY? You can't really buy the DXY, right? Well, this is how you buy the DXY. You sell EURUSD, right? Let's take a look at that, right? On the monthly chart, and we can see that the monthly looks like, well, Greg, you'll see we've got a little bit of a nascent uptrend, higher highs and higher lows on this monthly chart, right? It's kind of like doing a little bit, but you can see that, we have looks like we had this bullish move. We didn't get back to the old high of 112.45 or so. And this looks corrective as maybe a bear, maybe the form of a bear flag, maybe some type of a bear flag with some type of maybe upside, a little bit of upside, maybe back up to 112.89. But let's go ahead and look here. Let's go down to a weekly chart for the euro, and there you go. That's where it's showing up. There's our downtrend that's showing up right there on the weekly chart, right? And so we may high, a lower high, lower low, lower high, higher low. This is indecision. When you start getting higher lows and lower highs together, indecision, we still need to break this rising support line or come back down to this, so this is our new channel, right? So we're holding this line, we could probably come back down to 107, right? And then maybe ultimately we come back and retest the low down here at 104.53. We did hit our target last time, bulls versus bears. I forecasted that. Go ahead and rewatch that to show you, it's like pretty much like clockwork. Like I said, I did this for a living. People pay me to do this, right? So now I pay myself to do it. And my students do. But here's a nice double top right there at that 112.63 area. We had the high of, that was the high about the September 25th. Seasonal strength in the dollar came into play. Weaker economic data out of the Eurozone, and we can see prices moving down this and see if they can take this a little bit higher. Maybe we bounce back up to 110 or so, and then we turn back down to retest these other areas of support that are coming in play. The 1060, 1.0626, and maybe the 10659. Start stair stepping. We start stair stepping the other way. So this is we're at the 200 right here, and then we have the 107.76. Looks like a really good target on the daily chart. Look to the 4-hour, and you can see that we're getting a double bottom here, so a little bit of a lift off here. So be careful of being short here. You want to look for high and you want to buy low, right, to close out your trade. And so right now we're sitting right there. If we take a fib off this last swing, this major swing that we had from June 23rd or so up to the high where the double top is, we can get some. Actually, let's take this one. Let's take this low from April instead, right? And if like that, right? So we broke through the 32% retracement pretty handily. We're at the 50%, like close to that. We're about 10 pips above that. And then the next stop would be 1.0829, right? And this probably fills this gap. We're probably going to fill this. We have a gap, and Forex charts are indicative. So what that means is that they don't really reflect actual buys and sells at a current level. They actually just estimate where prices are, and because the price could be made at a bank, could be made at a airport rate exchange, right? There's no central reporting of the data. So that's what people, well, I have an indicator that shows Forex volumes. Like, no, you don't, because there's no centralized volume that anyone's going to share with a retail person, right? The banks don't even share their volume data with each other. So why would they share it with you? That's why you pay the fees. So because they track everything. It's not that all those guys are charging fees, that you're paying for them tracking the trades and keeping records of who's buying what at what point. Two people buying the sell, that's a point on the chart for a stock or for a commodity. For Forex, we don't know who the party is. So we don't know if an actual trade actually took place or it just gapped. So instead of having vertical candles, that's what these candles are a lot. These are Takanashi candles, but candles are different on Forex than they do on stocks and commodities for that reason. So we have we fill this kind of a gap fill, or we fill in this drop from here to here, and that drop would be right there, right? So we will look for prices to fill that area to the downside, just like that, right? So just like we had this fill here that went up, right? We don't know if it could have just one big party just put an order in and pushed it up, right? Okay, so Euro bear. Let's go ahead and look at the British pound. So the majors are pretty much a same book, right? Unless there's like individual data. Now, some pairs will be weaker to the dollar compared to other currencies. So, like, if the UK has more economic problems, then it'll probably drop faster than the euro, right? Or vice versa. So all the currencies will have some degree of dropping, and the thing about it is going through and picking. And we have videos just go ahead and look through the videos on moving averages and things and see how we can look at currency strength to determine which ones would go faster. Like, okay, we've got 3 dogs, right? Which dog has the most fleas, right? So here's there's a 4-hour chart. Oh, we're in the euro, right? I was going to walk this down. I was going to walk the euro down, right? Yeah. So that's a 4-hour and then 1 hour and 2 hours. So we get a spin. Yeah. So you might get a little bit of a rebound here. And then on any rebound, look for a short. So maybe we rebound back to maybe 109.25, maybe a banker's level. We rebound back to 25. I'm looking to maybe re-short this, right? Right now, it's already moving down. I would wait for a rebound. Okay, let's go to the British pound, right? Going to be lots of data on that. A lot of employment data. Looking at short of we've got some support here, so we might see a little bit of a rebound. Lots of wicks there. Maybe a rebound back to a banker's level, maybe back to the old high. But then that's going to set up probably nicely for our short, right? there again, there's lots of support there, so it might be, again, might get a little bit of a rally before the drop, right? But the monthly chart seemed like it also, let me remove all the drawings. Usually, Elliott tells us there's a three-wave correction against the trend. Here's our ABC. We got correction, ABC, correction against the trend. ABC, right? I got that wick. So we have our ABC. And maybe after our ABC, we have a continuation down, right? Maybe we have a downward move. As long as we can stay maybe below, no, that way, like 137.82. No, there's a chance that this could go a little bit higher if you use Fibonacci expansions. You get a little bit of a crawl. You know, if everyone gets short, they're like, okay, let's take it up a little bit more, right? You know, I mean, we could, get back to the old high, which is 42.36. 200 moving average at 43.99. That far on the monthly. Go to the weekly. See, the weekly gives us our, looks like we got a trend, we have a short-term trend here, right? And we have support coming in at if you want to target the 200 moving average. We use the 200 moving average for targets. 28.50 looks good, and that's about 200 pips away, right? It's pretty good. If you walk it down to a daily, right, we can see that we're coming down. There is a rising trend line that you want to be aware of, right? But price could drop down to that rising trend line, 29.45. But the 200's right there, we might get a slide. So it's like 300 pips away. I mean, it's a pretty good move if this continues, right? We have multiple drives to the top. Looks corrective, but be careful. We break above 34.51. All bets are off. Something's going on. Weird. Maybe there's some type of currency. I mean, remember, there could be black swan events that could happen with the election or something where people lose confidence in the US dollar because of, maybe unrest or shortages or some type of, terrorist act or something like that. Then we could see, the black swan event would be, breaking above here and going. Now we're moving against all the bullish moves of the dollar. Something's going on structurally. Okay. So you don't want to be like a deer in the headlights. It's small. I'm not saying that anything bad's going to happen. Probably nothing's going to happen. The world will continue to spin as it normally spins, but you must be ready. If you see something like this, hey, know when to cut your losses and then, pray. Okay. All right. So that's like the black swan event. If you start seeing the dollar weakening right now, there could be something interesting going on in the market. Let's go to AUD USD, right? And, again, with an election and what has happened before in the election, we could see something there, right? So we got this is our, and I think we get a little bit of a pop up. Had a little bit of a long there. I was looking for a little, and we got a double bottom. Maybe we get. I'm looking for a little bit of a rebound. I'm a kind of a short-term scalper. I'm like, let me see if I can get to the 38% retracement, 67.94. And then I, pick that up, and we might get some type of, we'll call an ABC correction, where we get our ABC goes like this, right? Or actually, yeah. No, I don't actually come down like that, right? Yeah. We'll get some type of three-wave correction up, and then we have a big impulse move down, a big five-wave down, right? Maybe some type of 1, 2, 3. Maybe we have some type of five-wave correction down, which would give us our shoulder, head, shoulder, and then I want to be shorting that area. That's what we teach in Pip and Run. But I'm going to remove it because my Pip and Run people are going to get mad. Hey, we paid for that. Like, I know. I'm sharing. Okay. Let me look at dollar yen. Dollar yen is my pair, and normally I steer away from dollar yen unless it really really shows something cool, right? But this is remove this remove all drawings there. Okay, like it wants to like star. Okay, so you're like, okay, well, Greg, it doesn't look very, but look at this huge bull run that we had since 2021, right? And we're coming down to a level of support, right? And we bounced. So price bounced to a low 39.34, huge drop, a drop from 162 to 139. We expect a dead cat bounce of some type of dead cat bounce, right? That's what they call it. Okay, don't write me, PETA. Don't write me. It's a technical term, dead cat bounce. Because even if a cat's thrown out the window, it'll bounce. I know it sounds mean. Wall Street was pretty mean back when I was started out. Right, weekly chart. There's our bounce. Right, nice bounce here, and usually a bounce is to a Fibonacci, and well, we passed the 38. We bounced there. And then the 50 is at 150.85, which is about 70 pips from where we are. I think we still get that bounce higher with the strength of the dollar. We go down to the daily, and I think we actually get back to the old high because Japan wants to keep weakening their currency to keep selling stuff. I mean, we have like some type of inverted head and shoulder pattern here on the dollar yen. Yeah, the dollar yen is my star currency. We've had guys, quadruple counts off of the dollar yen to the upside and to the downside. Right. So I'm looking for we have some type of bottom here at the 139.49. And I see maybe we could get maybe 153. Ultimately, I'm looking for a retest the old high. Might be a little bit optimistic, right? But we have some resistance here, 57, where we got a little bit of a, pullback and a drop. 200 sitting there though too. The 200 average is sitting around the 151 and a quarter area. So it's still 200 pips away. There's still, if you're driving a car, that's the brick wall. We don't want to drive into the brick wall, right? It could bust through like in the movies, but there was a movie where these guys are on it, right? And in all the old movies, they would break through the fence. When that truck where they were driving, it ran the fence held, and the car stopped, right? So that's how the 200 moving average can be. It can be a fence that's a little weak little fence. You bust right through it. Sometimes that thing is like a brick wall, and price turns from there. So I don't take any chances. I say, look, if I get within 4 or 5 pips of this thing, I'm out. I'm cutting my positions, right? I can drop down to a 4 hour. I can drop to a 1 hour. I got uptrends on the 30-minute. I got uptrend on the 15-minute, the 5-minute, 3 minutes flatten out, 1 minute, I go on the 15-second. And I go down to 15-second, I'm looking for an opportunity to get into this trade, right? I got a nice little uptrend when I drop down to the 15-minute, and then I might just go ahead and I might go ahead and get into this trade, right? Right. So, and you can see that I walked it down, and then all of a sudden it's starting to hit up. We'll come back to that, right? Dollar yen. Let's take a look at gold while we're at it. XAU USD, and then we'll take a look at oil, and we'll take a look at indexes. How about that? XAU USD. Okay. Hope you guys are enjoying this. I'm trying to move fast here. Is gold going back to the monthly chart? We know that it's been skyrocketing super high, long wicks as price. We got exploration, price discovery, trying to find out where those seller orders are. And we got to our high, 2006, 84.99. And you can see very strong. Look at that. Remember not too long ago, we were in the 1800s and we just broke that area. That flag pattern is broke and just a parabolic move straight up. I'm sure there are a lot of people that don't like parabolic moves. And what they do is do what? They go, oh, I'm going to try to sell it, right? And every time they try to sell it, they get crushed, right? Can't keep going higher. I go, yeah, there's no history here. This is the highest gold ever been in the history of humanity, right? That no, we've been keeping records, right? So I'm definitely a bull, right? And here's our gold spot on the 4 hour. It's still higher highs, higher lows. And you just got to look for weakness. And we got a little bit of weakness here. Drop down to the, whole number, round number, about 2,600, 2,602. And there's a $50 move, 40 to 40, $50 move from that low. So anytime you see a low or a pullback in gold, except for here, you got a pullback and a pullback, 3 waves. But when we get a little pullback these are just buys. Every time you see red, it's a buy. Red's a buy, right? So that's a little simple system there that you can actually take a look at, right? Let's go ahead and so gold, bullish on gold. Yeah, right. Let's look at oil. Oil, I'm not so bullish on because one of the bigger consumers of oil, other than the U.S., the bigger producer of gold too. I mean, oil and gold too, actually. But oil, a big consumer of oil is China. And if China is weakening and they are not trading as much, do they need oil? No. And so that tells you about oil prices. Oh, well, maybe they should go down. You think? Yeah. Or, move sideways, right? If we don't have a cold winter, of all these warm fall, and it could really so we can see that here is oil, US oil. This is a CFD, a contract for difference for oil. And you can see we're basically moving sideways. It's interesting though, because it's almost a similar pattern to the US dollar index, where we have a big rise, a drop, and we're moving sideways in this range. And we haven't been able to break lows, even with the bearish Chinese announcement, right? I'm just saying that we've been locked in this range for a long time, right? And it actually looks slightly bullish, right? Fundamentally, it sounds like, oh wow, if China doesn't buy oil, this thing could drop, right? Technically, it does not look like it wants to drop. It looks like it's holding sideways. And even though Libya is producing more oil, Saudi Arabia is producing more oil, Russian oil is coming in. Nobody knows how much is coming in. But we have not, despite all the negative oil fundamentals, we have not broken this on the monthly chart, which means this could be some type of A, B, and C rise. And maybe we're waiting for Israel to hit Iran's oil infrastructure. We don't get a lot of oil from Iran, but just the notion that oil production will be taken offline, well, then where are those countries, the countries that deal with Iran, like North Korea and Russia and India, other countries deal with Iran, and they don't pay attention to our embargoes against our trade restrictions with Iran. So they're going to start buying from the people that we buy from, right? Saudi Arabia and other places, which are more expensive, right? So they're going to buy the more expensive oil and drive the price of our oil higher because Iran is no longer available. So even though we don't use Iranian oil, yes, but other people who depend on Iranian oil will start buying oil from the people we buy oil from, which could once something happens like that, or a missile or a rocket hit Iran, this could break out and we could be back at 127, 130 in no time, right? So oil, I know there are a lot of bearish tacticals, but I'm slightly bullish. And look, we got I'm looking at, of all the negative fundamentals, we can't break the trend line. We couldn't break below the support area that's been going on for a while since 2021. The longer the base, the higher the race. We have a long base, almost 2-year base, and we can have a high race there. So fill up your tanks and hedge your bets. No, daily chart does not look so, it's probably responding to the technicals from China, right? But you can see we have a higher low, and this is on the daily 4-hour chart. You can see probably responding to those negative fundamentals, but we did have an uptrend. We did have a 3-wave correction against the trend, and we can see a breakout, maybe a flag breakout, 74. We could probably see 78 to 80 if we do see some type of military action, some type of attack on Iran. So or we could see Ukraine hit Russian oil infrastructure too, which could also create. So we've got two threats against the oil infrastructure. And with that uncertainty, that's probably why people are not willing to take oil on the short side, right? There's too many wild cards there. But let's take a look at BTC. I know I missed Bitcoin last week. I'm going to put Bitcoin up, BTC USD. All right. And we can see Bitcoin, nice breakout there. Let's go to the monthly chart. Don't want to jump ahead. We can see, look at this, the pullback, and now we're stair-stepping up. We had lows of 49.21. We were at the lows not too long ago. In August, we're at 48,000. Almost a $20,000 move, and we're back in the 63,000 area, forming a very this pennant, a very bullish pattern. Usually it came in this way, almost like hot sauce or jalapeno peppers. The way they go in is the way they come out. Came in hot, comes out hot, right? These came in going up, then they usually exit. And usually the height of this, so this is the season. If the dollar does weaken, then we can see, 124,000 on Bitcoin. Get yourself a Bitcoin, people. Get one Bitcoin and then start peeling off little Satoshis. You can sell fragments of Bitcoin and be like pruning. It's like having one of those herb gardens, like thyme or sage, but basil. Cut a little piece off, right? It grows back. Cut a little piece off and it grows back. You can do that with green onions too, but you also can do that with Bitcoin. You can cut a little piece off a Satoshi and it grows again. So people, if you want to liquidate Bitcoin, you don't have to liquidate the whole thing. Take off a little piece and let it grow back, right? And because we could see, you can see how these peaks, every time we've got the peak, past performance is not an indication of future results. We're supposed to say that, but the past results looks like future. Look, but the future, it looks like, I get my crystal ball. Bitcoin's gonna go up, right? Pretty easy, right? So I'm bullish on Bitcoin. Weekly chart. You can see coiling, compression, price compression went from high volatility back in March to low volatility. And then remember one thing that in the markets is consistent, we always have that the low volatility precedes high volatility. So once we have a low volatile compression, we usually see expansion, either expansion up or it could be expansion down. In this case, we saw back here in 2021, we saw compression. Price compression, then expansion, compression, expansion, and then we started going the other way. Compression, expansion down, right? But this is trending higher, and we could see a bigger move, even back up to maybe the 74,000 area. Would be a more conservative price target. But as the dollar weakens, we can see the move higher. The longer the dollar stays sideways, then this is going to stay sideways too. Because remember, we're trading BTC versus USD. People are willing to trade $64,000 in cash for one Bitcoin. Okay, that's what this means. It's exchange. They're willing to exchange it. So if they're willing to exchange, if the dollar goes down, they're willing to exchange more money for one Bitcoin and more money for one Bitcoin. And then sometime in the future, they're going to want to exchange $125,000 for one Bitcoin. So if you're holding on to cash, you're missing out on an opportunity to grow your money because the dollar is going down. It's been going down for decades. There's not a secret, guys. Holding cash is a position, but cash is a losing position in the long run. So you want to find assets or appreciating so you can grow your wealth, right? Money in a jar or under your bed or in the mattress may have worked in the 1930s, but in this day and age, with asset prices going higher and higher, we want to invest wisely. And that's why my mission is to help you invest wisely. So maybe you've missed out on your compounding years. You're not 25 years old. They say, well, if you're 25 years old and you save $400 a month, until you're like 55, you're going to have $1 million. But if you've already lived over half your life, like I just had a birthday, and I'm thinking I'm gonna live to be like 200 or something. But based on all the actuary tables. I'm over half my life, right? Um, and if you're starting at my age and you don't have your average person that has about $40,000, 40,000, you're not going to be able to retire off that unless you're going to be eating cat food and working at Walmart as a greeter. They'll probably have a robot doing that. So you'll only be able to get that job. But what you need to do is put compound. You can still put the power of compounding for you, working for you instead of against you in those high 24% credit cards that you're holding on to, right? To get flight miles, right? You can use compound scalping, trade scalping, where I show you how to compound and make profits very quickly in the market, because why? We have a system that we can use and that we can trade. And you can see that I made a little bit of money just while we're on this call, made the 46 bucks. I'll take that, right? All right. I made 46 bucks in a couple of minutes. Okay. But we can do that over and over again. It's called the power of compounding, right, guys? So that's and that's what it's all about. It's about being able to compound. You can't compound anymore. You don't have, honestly, you don't have years, right? God bless you that you might live to be 90, but your years of being able to make money are getting lower and lower and lower. How many people are, who are older, who can't find jobs, or they have jobs that are paying a lot less than they did when they were younger. And that's where trading does not care how old you are, right? Trading is a way for you to be able to work from home, work from anywhere in the world, take your capital and grow it. Or when you learn my system and you're good and you can, you're hitting 85, 90% win rate, there's companies out there, they're willing to give you their capital to trade, and they'll give you 70 or 80 or 90% of the profits as well. And that option, you probably don't know if that option is even available to you. But if you learn how to trade, right, if you invest in your education and see how far that got you. It got you where you are. Your income is topped out. You can't earn any money at your job. You have a big target on your head because you're over 50 and you're costing the company a lot more, and healthcare costs, and they can hire 4 or 5 young people or hire AI and they can get rid of you. And so your time working at wherever you're working at is very limited, or it's not going to be very profitable. And you have kids, I had kids going to college. You're gonna, you maybe want to upgrade your home or upgrade your home, your car, and you can't do it because you make good money, but you're broke at a higher level, right? You look good on the outside, but you don't have the money to retire, right? I'm going to my 40th, reunion, and I can retire. I love what I do. I work a couple hours a day. I work 2 hours a day, and I have the rest of the day free to work with clients or have a really fun day. I had a client. I had John fly in from a $1 million client, who's my graduate student, fly in to Vegas from Austin, Texas. Fly in here, took me out to a wonderful meal at Catch. Catch is a wonderful sushi restaurant in the Aria Hotel, and top grade sushi. It was a wonderful experience. Then we saw the hook and horn. We saw the Horns beat the Sooners. We had a really great birthday, right? And a birthday where I don't have to worry about Social Security being liquid or not, right? And if your retirement plan is Social Security, if you haven't even paid the Social Security, and you got this little bit of money that you keep throwing at prop challenges, take that money and invest in yourself. Learn a skill that will pay the bills that I can teach you, okay? Everybody needs help because the mind that created the problem cannot solve the problem. And I can help you solve the problem. Click the link below, sign up for a free profit acceleration call to find out if I can help you. I look forward to helping you and helping you see your dreams, see you on those beaches, see you, hugging those grandkids, be able to leave them something other than your bill.